Alrighty, guys, we will start. There is a majority of the people that are going to watch the recording of this. I do apologize if there's some background noise. I'm not in the best best place to be doing a live broadcast, but we will get things going. This will be a two-part series, price action trading. This is the introduction to it. This is very basic level. The second part will be much longer. Everybody viewing this will have access to it, and we'll have it to view whenever they would like. Both parts. This part, as I said, will be an introduction. The second part will be a more advanced lesson into price action trading. There is a number of things you need to learn to do price action trading. They're all very basic level technical analysis fundamentals, and that's what we'll be going over. The strategies of price action trading we'll get into in the next one, which we'll probably do here in the next couple days. I'm not sure if I'll do it live or through a recording. It seems like most everybody that's watching these seminars is spread all over the world, so it's kind of hard to time everybody's schedule that way. So this one is live. The next one will be much more in-depth. I will be pointing you in the direction of a few things to learn because there's just some stuff you have to learn that I can't help you memorize, such as candlestick formation, also trading patterns that very basic level trading patterns, but those are all things you should know when getting into price action trading. And yeah, so let's kick it off. This presentation is for educational purposes, not giving financial advice. So just keep that in mind. Alrighty, so what is price action trading? Well, basically, you have a stripped down chart, and it's a form of technical analysis. It ignores fundamental factors of a security or asset and looks primarily at the price and price history. There's no indicators on it, no lagging indicators other than some moving averages. There is a lot of price action traders use the basic volume indicator that comes standard on every chart. I do like to add the OBV and CMF. But price action trading, the style of it is very useful in all technical analysis. This is something you should all have an understanding of. And from there, you can add on to your TA skills and add more indicators, more strategies. But this is your stripped down naked charts are something everybody should understand and look at and be able to understand what's going on before moving on to more advanced forms. What differentiates it the most from other technical analysis is its main focus is the relation of the asset to its current price and past prices opposed to values derived from price history. The past history includes swing highs and lows, your support resistance, and a number of other factors. A lot of price action traders use bars for their charts. We will be using a combination of both on examples. When we get into the actual strategies, we will be using all candlesticks instead of bars because they are easier to read, in my opinion, when it comes to price action trading, and I prefer those over bars, but every trader has their own style, and some do prefer the bars. An experienced price action trader will be pretty well trained at spotting multiple bars, patterns, formations, setups during real-time market observation. You really want to learn to master each one of these things that we're going to go over, because once you master those, price action trading and technical analysis in general gets a lot easier. You're going to need to have a subjective opinion on the strength of each of these and how strong a setup each one of these are, and that's something that it will just come with time, being able to analyze it quickly and deciding whether it's a strong setup, a weak setup. Over time, as you practice each one of these things that we'll go over, you will it'll begin to become natural to you. I've always said technical analysis is like a puzzle. You learn a little piece by piece until the whole puzzle fits and you see what the whole picture is. You have one puzzle piece that may be one indicator, or one puzzle piece that may be one strategy, and you can see that puzzle piece, but you don't know the entire picture until you put all those pieces together. And so it's something that you just take a step by step, learn each one of these individually, and just add to your technical analysis skills from there. Let's see. So the main things you want to look for or learn when beginning price action trading is support and resistance. That's with any technical analysis. You always want to know support and resistance, where those levels are at, in addition to trading patterns, rising wedges, falling wedges, and so on. Those are all things that you'll need to learn on your own, but we'll go over a brief version of each one of them. The next one is trend and range identification. You need to understand whether a market is trending, meaning is it going up or down, or is it just ranging, going sideways, such as we've seen with Bitcoin the last couple of weeks. Candlestick structure is very important. A lot of price action traders don't actually pay attention to that, believe it or not, but I think it is a fundamental piece of price action trading that every trader should know, regardless if they're a price action trader or a traditional technical analyst. You really need to learn your candlestick structure. That's all stuff that everybody should be going over on a regular basis when they're doing their TA. Volume analysis. As a lot of you guys know, I'm a big volume trader. I'm not a big price action trader. I mean, I do use each piece of price action trading when doing my own TA, but volume is key. Volume can predict markets, and volume is what moves markets. So volume analysis is key in price action trading and also other technical analysis. Market behavior. So what market behavior is, you have a number of traders that might be stuck in a bad position. Where are they going to exit out of it? Where are we going to see a big dump off? You know, where a majority of traders going to enter into trades, and so on. The next one is trade implementation. And trade implementation is finding your entries, your exits, where to place your stops, and so on. We'll cover trade implementation a little bit today, but we'll get into that more in a more in-depth class when we start going through price action trading strategies. There is a number of strategies to cover on that, and it just requires an entirely different class. So we will be doing that, like I said, in a couple of days, but we'll go over the basics of it. So support and resistance. This is one of the key things to learn when doing TA and also when doing price action trading. It's pretty basic definition. We all know what support and we all know what resistance is. I'm not going to go over and teach you how to find support and resistance, but what I'm going to do is I'm going to show you a few methods that I use for finding support and resistance and a few tools I use also. So let me go over to my charts real quick. Okay, so these candles right here are bars. They're not candlesticks. A lot of price action traders use them. They're more used in traditional. You don't see them in crypto as much, but I added these on here for those of you that don't understand them. For the majority of it, we'll be using candles. I do feel candles are easier to read. If you don't know what a candle structure is, I highly recommend you study up on these things. These are all things that you should know before learning any technical analysis strategies. But real quick, you have your basic candle body right here, which is you have your opening, which is the bottom of the body, and your close, which is the top of the body, or vice versa if it is a bearish candle, your opening and your close. The opening in crypto typically takes place immediately after the close of the last candle. There is no trading time lapse in cryptocurrencies. In traditional markets, you see different candle formations that you won't see in crypto. And those candle formations come from when the market will close for 18 hours. Most markets are open 6.5 hours a day, and so there's a gap in trading. But the candle formations we see typically open and close right after the other one. Sometimes there is a price gap that happens instant as the next candle opens, depending on the time frame you're looking at. But generally, you see in cryptocurrencies, such as we can see here, a open and then an immediate close, or I'm sorry, a close and then an immediate open right next to each other. In traditional markets, you may see it down here sometimes. It just depends. So your basic support and resistance levels. So what I have on here is an indicator. I cheat a little bit just because I don't have time to be doing all support and resistance levels because there is a lot of them. Traditionally in crypto, as fast as it moves and as volatile as it is. So I use this indicator called key hidden levels. It's $20. You really don't need to use this, but this charts out your daily hidden levels and also breaks it down into a time analysis. Another indicator that you can use to find support and resistance levels is your volume profile. You have your fixed range, which is, let's say you want to just look at this time frame to this time frame. You set, let me back up here. You set your first point from where you want it to start and your ending point. Let me change my inputs here. I believe the volume profile is free for all pro accounts on TradingView. I like to place a lot of rows so that way I can really get an in-depth understanding of where the support and resistance levels are. And here, let's go down to, actually, we'll go back to this. So that's your fixed range right there. You can place it from one end to the other. I have written a a educational piece on TradingView that I'll show you now on the volume profile. So if you're not familiar with that tool, it is free with TradingView accounts that pay the pro price. I do recommend that you go study up on the volume profile because it is a very useful indicator for finding your support and resistance levels. Here it is right here. Just go to my profile and look for volume profile, and I go through the fixed range, the session range, and the visible range. Back to this. So I just showed you the fixed range. Real fast, we'll go over the session volume. What the session volume does is charts it out one day at a time. So 24 hours. So each one of these is 24 hours. Let me change this to 100 again. You can change your inputs to whatever you want, your row size, and that will adjust the number of bars here that you see. You can get some pretty good accuracy. You can also show values, which will show those because you really have to zoom in to see the values on a session range. But the session range takes it 24 hours at a time. This is the hour chart. So there's 24 candlesticks between here and there, and it shows you the support and resistance levels. You have your buy side here in blue. Traditionally, it'll be green, but I have adjusted mine to blue and yellow, and your sell side is the yellow right here. Typically, the default indicator for volume profile is green and red for your buy and sell. But you can find heavy levels of your support and also your resistance. Let's go to this 15-minute chart here. And you can see there's major support at this level where we had bought for that day. It's pretty clear without even the volume profile, the amount of chop action going along here. But the volume profile allows you, when it's not as clear right here, to really dig in and find those levels. Let me get rid of this and I will show you visible range real fast. Visible range is probably the most useful for finding your support levels because it's everything that's visible on the chart. So as you zoom out, it should adjust. See, here is the traditional green and red. This is considered a value area where the most amount of volume is. It's not necessarily always that your buy volume, it's just where the most amount of volume typically is. It does tend to lean towards your buy side because that's where your major support will be and your major volume spikes. And so it takes that and it maps it out. As you can see here, if we really zoom in here in a second, here, we'll do so like this, then you can see the values. There is a way to where you don't have to zoom in, and the way to do that is just take your row size down to like a smaller number, and then that's way too large. You can see the amounts a lot easier right here. But keep in mind, again, as you zoom, it will adjust. So if you're looking, for instance, let's just take this area right here. We can see there's major support. It doesn't take the volume profile to tell you that. So besides those two indicators right there, there's a number of ways to find your support and resistance. It's pretty clear just by looking. You can see your support and resistance levels, your trends. Right here, we have a very decent resistance. If we were to zoom in, we could see, not zoom in too far though. Let's change this to red to indicate resistance. We can see that there is, hold on, let's get the right view we need. So traditionally right here, there has been slightly higher buy volume than there is sell volume. So this resistance isn't too heavy right here. But we also have quite a bit of support down here. Trying to find. So one tip when you're doing your support and resistance zones is don't typically focus on one line if you're trying out. See how I had placed one line here? You want to place zones. So where you see the most amount of price action occurring, you want to adjust your support and resistance levels like so. It makes it a lot easier when you have zones, such as I've done here. And we'll put a little box here that way it makes it a little bit easier for you guys. But when you're first starting out technical analysis, turn it into zones like so. It'll make it a lot easier than trying to find the multiple support and resistance levels, because as you can see, there is quite a bit of resistance levels. I mean, it's mainly along this area right here and up top, but there's also support here, which ended up turning into resistance. So it's best to use zones, especially when you are making trades throughout the day, because you might have this zone right here. No, this is not exact. I'm just rushing through this because I'm trying to keep this under an hour. And then you have another zone here. But you don't want to get too zone happy and have everything zoned out, because there is such thing as too much clutter on your chart. And the key to price action trading is not to have a cluttered chart. All right. So that's your basic support and resistance right there. And let's switch to full screen. And I do recommend that you chart out zones instead of just a line for a level. You can use the volume profile, the VPVR, which is found here, as I showed before. Visible range, session range, fixed range. There is a tutorial on my TradingView for that. And you can also eyeball it and find your support and resistance levels. Clearly, this chart does not have all the support and resistance levels, but that is this is just to show examples on how you would find them. Most everybody watching this already understands support and resistance. Okay, next one is trend and range identification. So once you have your support and resistance levels, you need to see if a market is trending or ranging. Now this is a key point when making your trades, because in a ranging market, most traders do not trade. There is trades to be made. I have a little bit of a reputation for channel trading, which is trading when it is ranging. So you find a small area, such as can be seen here, and you trade the top and you trade the bottom. It's very basic. You buy low, sell high, you place your stops properly just above the wicks, and you trade it back and forth. That's what I do a majority of the day, is I trade ranges. But most price action traders trade trends. And so that's what we'll go over right here. Okay, so we have the 4-hour Coinbase. As you can see on Bitcoin, we have been ranging for quite a while. If we flip this over to the daily, this has been a pretty ridiculous market, other than about 6 days ago when we had a drop. This is the volatility is at an all-time low. So this is a horrible market for price action traders to be trading in. You want to find a solid trend typically when you're price action trading, such as can be seen there. And sorry if you guys can hear that cat. But what we have here is a clear trend going upwards, and then we also had a clear trend going downwards. So pretty easy to spot clearly. I mean, if you've ever looked at a chart, you know what's going up and you know what's going down. It's pretty straightforward here. We're ranging. Ranging is not good. It's typically, as a price action trader, you would place your support and resistance, and you would wait for the market to break a certain direction. We have our support here and we have our resistance here, and we are right in between it. If you wanted to be a risky trader and trade this channel up and down, then you would, clearly buy at the bottom, place your stop at the end of that wick right there, and sell the top back and forth. This is on the 12-hour, but let's go to something like the 15-minute, and see if we can find a better example of trending and ranging. Okay, so right here, we ranged across this entire from 18th of October. I'm sorry, the 31st of October up until November 1st. So a day we just ranged. That's horrible price action. Volatility is at an all-time low for crypto. But yeah, and then we had a breakout. So most price action traders would have placed their support and resistance levels, waited for the breakout, and traded that. Let's place some right real quick. Hold on one sec, guys. Sorry about that. I had to get rid of the cat. Okay, so we have our resistance level that we just placed, and then we have a support level like so. So let's back up and replay. So as a price action trader, you would not like this. You had an attempted breakout earlier that didn't happen. You would have gotten stopped out on that position. But as you're sitting here waiting as a price action trader, let's speed this up a little bit. We approached resistance, broke it out. You would enter into your trade and typically place your stop there. Some price action traders would go even further and place it at the last support and hold through any kind of volatility. But as you can see, we ended up ranging into a bullish trend here on the 15-minute. We'll speed this up a little bit. And as we all know, that is not ranging, that is a trend. So that is the basics of trending and ranging markets. It's very simple and straightforward. It doesn't require a lot of thought, just requires you to look at the market and decide whether it's going up or down. So once you have trend and range identification down, the next part of it is candlestick structure. Now, candlestick structure is not something I'm going to cover today or in the next seminar because it is something that you just need to memorize or use a cheat sheet for. There's a number of candlestick structures to memorize and learn. Once you begin to memorize a few of them, I kind of feel most traders get the handle of them and don't need to learn the exact names of everything. The name's not important. It's the shift in capital that is important, and identifying those candlestick structures to know what each one of those means. You don't necessarily need to know the name, but you need to know the psychology behind it, such as like a spinning top here seen on the right-hand side. A spinning top typically indicates that the bulls are waning, they are losing power, and that the bears are beginning to have control. You can see we had a nice bullish candle right here, leading way up. This was actually when the Tether FUD a few days ago happened, and everybody was trying to get rid of their Tether, and it dipped way down. Bitfinex had a gigantic $1,000 run up, and then you can see our next candle here was a spinning top, indicating that the top was in on that drive and that we were going to begin to trend down. And how you identify a spinning top is you have a long wick on the top and on the bottom, and then a very small body indicating indecisiveness. Now, the trend was bullish beforehand, and so the indecisiveness typically means that the trend is reversing and that the bulls are taking over, as can be seen there. So if you're watching this in real time, we'll switch over to the charts. We're on Coinbase here. Let me switch over to Bitfinex. You know what? I think Bitstamp had a decent spinning top on there. Yeah, use the next one because better example because of the anomaly on the candle prior. If I can find the dollar. Okay, as I said, I won't get into each candle formation because there's a lot of them, and some of them don't always apply in crypto because we have 24/7 markets. But I do recommend you study those. If you would like a cheat sheet to use, please just message me and I'll send you a cheat sheet that's available on the web. You could even Google it, candlestick formations. A lot of traders don't necessarily memorize the names. Like I said, they just memorize the formations. And once you begin to understand psychology behind things like spinning tops or tweezer tops or dragonfly dojis, then you can just kind of look at a candle and understand, okay, this is reversing here from the trend. There was a nice, almost a spinning top right there. We had a bullish trend, indecisiveness, and then we dumped long wicks on either side, small candle body, indicating that the trend was reversing. But there is a number of candlestick structures that you do need to learn, and just take your time and studying those. And candlestick structures apply to all forms of technical analysis. The next one is volume analysis. Volume is great. Volume is everything to me. Volume precedes price. So as volume pours into price, price will adjust. Price does not always adjust instantaneously from volume, and that's fine. That's great. I love to find divergences between volume and price action. So, and what I mean by that is we might see a heavy spike in buy volume, but the price is not moving. Eventually the bears will give out and we will break out. I'll go over a few, whoops. So here we have the Coinbase Bitcoin 6-hour chart. We have our standard Bitcoin or our standard volume indicator. Truthfully, when I trade and I do TA, I turn this thing off. I do not use this volume indicator. It is kind of useless other than to find oversold and overbought conditions. But there's better indicators for that, such as the GMMA, which is the Guppy multiple moving average. Again, there is a, I did do a, I'm sorry, wrong screen. A class on, I'm sorry, a quick tutorial on Guppy. It is here on my trading view. Let me pull this up real fast. The Guppy is typically not used in price action trading, but I only bring it up because that volume indicator is used a lot for oversold and overbought conditions. And I prefer things like the Guppy and other volume indicators. Here's a quick video on, it's not on the GMMA, but it is how to use it properly. We won't get into that because that's a whole nother class in itself. The gray screen here. Okay, so we have our typical volume indicator. One tip you do want to use, or I like to use when I am using this, is you go into settings here. You have your moving average. You see this orange area right here. I'll make this slightly bigger. So your moving average is kind of visible, right? It's good for when you find things like rising wedges and stuff. You can kind of, gather in a rising wedge. You need to have declining volume, right? But higher lows. And so this indicator is useful for that. But a lot of price action traders rely solely on this for their volume analysis. I do not. But one tip that I have always liked to do is pin to left on scale when I am turning this on. And what that does is it kind of gives you a more pronounced view of everything. Yes, it's covering up the candles, but you can really see the volume moving averages and your volume spikes on that. Let me take this back to default. But the other two indicators I like to use, which are not used in traditional price action trading because they are lagging, is your CMF and your OBV. I've done tutorials on both. Both of those can be found on my trading view. I'll show you real fast. They are semi-buried, so you may have to dig down. But here's the chalk and money flow. I recommend you read that. Again, this is not part of price action trading, but I do use it for part of my price action trading. I do believe that there's no one correct way to do TA. There's only a way to find the right answer, or the right conclusion that you need, the right analysis. And if you have to use price action trading in addition to other indicators and other technical analysis styles, then so be it. Here's the on balance volume one. The OBV actually did call the top on Bitcoin. If you go and look at this, I broke it down. So I do recommend you learn this. The CMF also showed it, but the OBV showed us at $17,000 that we were beginning to top out. And that was right here, actually, because that was LTC I was first showing. But the Bitcoin top was able to be identified. I do recommend you go read that if you haven't already. most of you guys have. But the CMF and the OBV are they complement this traditional volume indicator very well. If you want to keep the naked chart theory and style with price action trading, then that's fine. But I do use those in addition to other price action trading strategies. And real quick, your basics of this volume indicator, if you don't know, is you have your sell candles, your buy candles, and clearly the higher they are, the more sell volume or buy volume there was, and then your moving average, which makes an average of these. So you can kind of see as volume is declining here. Again, there is a lot of intricacies to price action trading and technical analysis. A lot of it is very basic level stuff, and it's all stuff you'll have to learn on your own and memorize yourself. But we're going over the introduction to this so we can get into advanced strategies in the next one, which all of you will see. So the next one is market behavior. And what I mean by market behavior is, as typically retail traders get into bad positions, you need to learn to where they're going to panic dump out of there. So if we take, for instance, the breakout that occurred here. As the breakout occurred, we found a little bit of resistance and formed some support here, and a number of traders went long, and eventually we broke out again. Well, we ended up topping out. The market was exhausted. We can see a resistance level there, and as we started to come back down, we found just some quick support here on the prior support where people had gone long, but most traders will panic. And we had more of a panic here. You can see there was not much support here, but we did find a bottom for a second. And most traders that had gone long here or even up here had exited out of the position, creating a further sell-off back down to support. So you need to learn to understand how the market behaves in relation to price action. How are a majority of traders going to exit out of the position? When are they going to exit out of the position? Again, we found another trend. We found our bottom here, and we found a bullish trend. We came up to some prior support that is resistance now, and we ended up reversing. And you can see there was a big, gigantic sell-off there on that daily, and that was a nasty day. And that was a majority of traders seeing that this area got rejected. And so there's still a downtrend in effect. And so everybody that was long had sold their positions and created a nice solid daily sale candle. The way they viewed this is we broke out back in July above that level and continued on. Well, we ended up reversing here. And as this candle began to confirm, traders panicked and closed their positions and created a further sell-off again back down to support, still creating the downtrend in effect. Overall, though, this support level is held very well. There is not a support line there just because I didn't place it, but it is visible, as you can see. All the candle closes there, and it is slightly getting higher. One thing that's concerning, though, that I just noticed, let's go over to this damn BTC Bitfinex. I know it's right in front of my face, too. There it is. Let me load this daily back up because I just noticed something on there. One thing that is concerning is we do see some higher lows here, but we also see declining volume on our volume indicator. That typically is indicative of the same rising wedge theory as lower highs, but lower volume, or I'm sorry, higher lows, but lower volume. The market will begin to get exhausted and sellers will ultimately take over. And you can see the amount of sell pressure on the CMF here is very high. It looks like it's time for me to do an analysis on this because this market does not appear healthy right here. Higher lows and lower volume with bigger sell pressure is worrisome and typically indicates a dump. Now, Bitfinex's price action is all messed up because of the Tether FUD, so I wouldn't need to verify this through other trades. But on a side note, this does not look healthy at all. So yeah, market behavior is key to understand where the market is going to exit out of their positions. And that's just something that comes with experience. As you learn candlestick structures, and you learn patterns and you learn the basics of TA and price action trading, market behavior will begin to come natural to you, and you can also kind of you just use logic when looking at prices. Okay, if I was a trader in a bad position, say here, I would more than likely panic dump as soon as that support was broken there. So it's something you need to learn to understand and is key for all technical analysis. The next one is trade implementation. Finding your entries, your exits, your stop losses. How do you do that? Now, this next class, we will get into that a lot. This one is going to be brief. It's an introduction to it, but the next one will be much more in depth. And I'll take you through a few examples here in a minute on trade implementation with price action trading. But overall, I will show the various strategies, which take about an hour in itself for price action trading in the next class. Trade implementation is different than strategy, but for now, we'll get into that. Okay, now where is my chart that I had saved up? All right, let's drop down to I had some examples saved, and I think I loaded over those when I was trying to find the Bitfinex one. I did. Okay, so let's drop down to the 4 hour. Take that off. I'm going to show you some examples of a very prime. Now, this will be hindsight TA, mind you, but we're using this as an example of how you would enter into a position. So we're going to go ahead and make a range here instead of just your support and your resistance. So that way you guys can kind of get an understanding. And that's not even accurate, actually. That's a pretty broad range. Man, I wish I had that other example pulled up. Okay, let's replay. So let's back it up to here. So let's say we are a price action trader and we were watching this range. We also, we have a range down here. But for the sake of conversation, we're on the 4 hour here, and we can see that we had a key level breakout. It's happened already once. We're watching it again. We're going to gamble on it. Let's say these 3 volume spikes right here are pretty decent. We didn't have those over here as much, but as this candle closes, we're looking to enter into position because we've broken resistance there and it's confirmed. So where would we enter it in? We'd enter it in on there, possibly on the retest of the support, and then we would place our stop either on the wick here or the wick prior if we are a less risky trader. Now, as this plays out, we can see that, let's pause. Pause, I said. So what had happened? We ended up breaking out and then got rejected. There was a prior resistance level further back, but we ended up rejecting. The market lost strength. Even though these 3 volume spikes were looking good, they were declining, which is not the best scenario that we want to see, but we took a position, and here we are on this candle watching this. We have our stop loss placed below this wick here. Let's say we're a risky trader, so we're going to take the position entry there, and we're going to place our stop way down here, which is fine, but that is a pretty broad stop. Actually, it's not too much of a price gap, a couple $100. So we're still in our trade, and as this trade plays out, we are looking for a clear trend and no more ranging. It does appear a bullish trend is in effect. We still haven't been stopped out. We're very close. We might add, pause, I need to slow this down. Back up. So we come back down here, and it appears like we are just going to chop. Most traders that are inexperienced panic at this point. But as you can see, another trend was beginning to form here. The volume did not look great, but if we pull up our CMF and our OBV, it's slightly increasing. So we're going to keep our position open. As the trend begins to form, we have placed our exit here at, I did not cover this, at a prior support, and it is now resistance level that I've placed on there. This is actually placed by the TD sequential here. It is actually a risk level that they place for you automatically. They also place the support levels. You can see a support here. But now currently this is all resistance because of the range under here. So we're going to place our exit target there. Now, if you didn't have this already on there, you would take a look at, when entering into this position, where your next resistance is. Your next resistance is here, potentially up there if we can get enough power to break through. So for this trade, though, we placed it here. There seems to be heavy buys, and as it plays through, the trend forms. And let me back up here. So as traders enter into shorts, this is when we get into market psychology. So we had this giant wick up. Traders begin to enter into shorts, and we declined a little bit. Everything looks good. The smart traders close their position down in this range, but you're going to see traders after the breakout, the confirmed breakout of a candle close, begin to panic close their short position, causing rocket fuel to the rally. And so that's why we see these gigantic candles here. Typically is short positions either being liquidated or panic closing. Let's speed this up a little bit so I can get through this fast. And as the position, look at that, we had a perfect 9 too. Tone Vase would have had a freak out over this 9. But we ended up hitting our resistance. The TD indicator is not a part of price action trading. Even though technically it's not lagging, it is still not a part of it. But I thought it was interesting there that we had a perfect 9. And if this were to close like this, I don't know, I'll have to look, but we have almost a spinning top there. I like to see the body a little bit smaller on the spinning top, but we'll call it a spinning top for now. And typically indicating, yep, that's when you close your position. Your position would have already been closed had you placed a stop order there, or a close position order. And as you can see, the trend should begin to reverse down. Yep. And now we have a clear downtrend in effect. Most price action traders would not be entering into any trades through that chop, but we ended up forming another trade. I should back this up, but I won't. So, and that's your trade implementation, but let me go back because I didn't really cover that. Let's say you were taking a short position here. This is all very basic level, but again, this is an introduction into price action trading. We'll get into the advanced stuff for the guys that already understand most of this in the next one. But let's say we were taking a short here. I wouldn't advise it. We're sitting right on a diagonal support there, but for this conversation, we are. We would place, I would be placing my stop right about so, which is the top of that candle wick. And as you can see here, we also have some mapped out placements, and that is a risk placement for the TD right there, TI risk line. Again, you won't have any of those tools, but if we were to take a short position right here, it would look like so, entry into there, exit into this prior support down here. And our stop loss would be just above this last wick on there. We could place it way up there, but that's a little bit too risky for me. And that was an anomaly right there. I believe that was the day that the tether, no, it wasn't actually. Either way, when we get into trading strategy, you'll see the placement of stop losses a lot easier. Now, stop losses are a bit subjective on where you place them. You can place them in multiple areas, and it's all based on your own risk model of your portfolio. So typically the proper way to place a stop loss is on the wick or the body candle of a prior candle or a prior high or low, depending on your position. and also support and resistance levels. Also, I use the Ichimoku cloud, but that is not a part of price action trading. I also use moving averages. Some price action traders do use moving averages. Let's take a look at, let's look at the 50 moving average. So yeah, a lot of price action traders do use the 50-period moving average, the 9-period moving average, and a few other ones depending on their preference. But back to stop losses, it all depends on your risk model, how much you are willing to believe in a trade, or how much volatility also. If we have really volatile markets, you want to kind of give yourself a little bit of room to be stopped out and not have your position closed. For our next, I'm sorry, wrong one. For the next seminar, we'll do that in a couple days from now, and that will be the actual strategies. This is the introduction to it. Again, let me go through everything to reiterate. The basics of price action trading are exactly that, basics of TA: support and resistance, trend and range identification, candlestick structure, volume analysis, market behavior, and trade implementation. All things that traders should understand for all technical analysis, including price action trading. For now, we'll wrap that up, but I highly recommend you brush up on those things and get as many as you can memorized, because the second part of the seminar will be much more in depth on strategy. And in order to understand those strategies, you need to understand the breakdown of price action trading. That's it for now, guys. I appreciate the patience on the issues I was having the last couple days, but I promise I'll make all that up to you with these series of price action trading classes, and hopefully we can get you guys educated and familiar with this. Thanks.